Welcome to India Market Open. We're gearing up for trade. It's been a weekday in terms of yesterday's trade, but no surprises there. Minor profit booking was more or less on expected lines, but the sell-off across metals, inflation in the US, there's so much that's happening outside suddenly, and there's no decoupling.
Absolutely no decoupling. I think the trepidation that we're seeing in global markets is spilling into ours as well. Sluggishness overall. Sluggishness and mixed cues is how I would describe it. Let's quickly take you through what's been happening overnight. It seems like the Nvidia rally is taking a pause and pulling down the Nasdaq with it. So you've seen that sort of mixed outcome at the end of trade on Wall Street yesterday. Mild gains and a mild green only on the Dow. But if you pull up all three major indices, you see what kind of a day of trade we had. So like Samina said, the big Q is going to come later tonight, India time, when you're going to see Feb CPI data. Now, this is important because remember the Jan data was more than was expected, much hotter than what was expected, and that did have a negative impact. Now, most polls are pegging the Feb data at 0.4% increase month on month, for the year 3.1%. So if you have anything lower than that, that will definitely be seen as a positive, which is why not too much movement on bonds as well. Inching upwards, I would say, overall, ahead of that data set which will come out. Just let's pull up Asia, mixed cues there as well, I would say. Japan, of course, a different story altogether. You had, inflation data out in Japan as well. Corporate inflation data, actually, which is tracked higher than expected. And remember, this is an economy which is possibly looking at the first interest rate hikes in 17 years, actually looking to maybe get out of negative territory. And that's bearing down on the Nikkei. So if you were to ask me what is this setting up for trade today, no positive cues at least coming in. A quick look at the fund flows before I hand it to Niraj for the trade setup of the day. So FPI buys for the fourth consecutive day in a row, about 4,000 crores, 4,200 crores is what we saw. DI is about 3,200 crores. But remember, we did end weak in trade yesterday because of, I suppose, financials and the Tata Group stocks.
Yeah, and some of this buying also because of those block deals that happen. I mean, yes. Goldman on Praveg and a bunch of others. So that's first. But straight off the bat, to Samina and Tamanna and everybody else, Ramazan Mubarak, and hopefully the month is fabulous for everybody who's observing this. So that's part one. But yeah, Tamanna, you are very right. The trade setup is anything but looking fabulous. So it is looking wobbly, even as the quant indicators are indicating that the downsides will be limited. And I'll tell you why this is happening is because if you look at the last 5 days, for example, look at Nifty Bank, look at mid caps. They're all stable, about 0.2, 0.3, 0.4% kind of downtakes. This is the table that we have there. But the small cap index, the last 5 days, has corrected 3.95%. Therein lies the problem. Individual portfolios are hurting. And when you see the screen of stocks which are correcting 5, 10, 15, 20%, that's essentially at the broader end of the spectrum. So now for a period of 5 days now, we've had this underperformance coming in. And rightly so, because those valuations are out of whack for a clutch of stocks. So there is the problem for individual portfolios. You might see the stocks on the Nifty staying okay, but the broader end of the spectrum is certainly hurting. And PSU stocks are correcting the whole of last week. Yesterday, the problem is even the banks started participating. Because remember, hitherto we argued how PSUs may have run completely haywire, but public sector banks were not out of whack when it comes to valuation. Some of the valuations like SBI, for better growth, is still trading at a lower valuation to the private sector banks. So public sector bank valuations are okay, but even they participated in trade yesterday. SBI, Canara Bank, etc., amongst the top losers in trade. So public sector banks are now participating. I think the narrative has changed from, I don't know if you guys agree with that, but the narrative used to be buy on dips. Currently for the small caps, it's sell if there is any whiff of danger. I mean, this whole Zenith Media thing that has happened about this Dubai-based broker or whatever it is, everything associated, any whiff of danger, just go out and sell it. We don't want to do it. I mean, Niraj, that seems to be the mantra, right? Yeah.
And small cap is down 8% from its highs, but it was only 10 days ago when the regulator talked about froth in that market. So it almost seems like this was exactly what was expected to play out. Sell-off, but not intensive on any given day. But by the end of it, we're 8% off the highs. And also, I think Tamanna and me discussed this, right? Trade is now moving to the large cap space. We've talked about this towards the end of last year.
Yeah.
We didn't really see money moving into the large cap space. But I think for now, at least, the broader market underperformance could be an indication that anything that's looking bullish is probably focused on the large cap.
Yeah, it shows, right?
I just want to talk about, because you mentioned Zenith Multimedia and that whiff of danger. We saw that with Balkrishna yesterday as well. So just want to, highlight that this is one different kind of a concern. Of course, the larger move towards large cap stocks is there. But the crackdown of regulatory authorities, that sort of clean up that we are seeing, it's also typical before a poll session, income tax rates, etc. All of this is going to have some news flow and impact, at least on certain segments.
Yeah. And just that last point, I mean, just this move towards large caps is evident by the fact that banks are steady. Banks are not correcting. Index is stable. Yesterday, life insurance seemed to be the oasis of growth. Long build up in some of those stocks while the index was doing what it was doing. Just kind of shows that people are veering towards large caps in a meaningful way.
Any concerns on PSU? Because that is showing some cracks now, right? I mean, a little bit of disconcern there.
Just the valuations having gone the way they did. I mean, as so many people said, that people are just not minding in any kind of execution risk for any of these. I was speaking to a power analyst off record who spoke about a very reputed power company, PSU, said that company ने बोला कि 4.5 साल में power plant बनाएंगे तो बनेगा. If you look at the history of the company, they have not come out with a power plant in less than 6 years. So people were not minding execution risks. I think that is now coming to the fore.
I suppose that's also with the political capital that this government has.
Most certainly. You could argue that there is an argument to be made there.
No, but that's what has been running up the PSU stocks, right?
Yes.
If they've said it, they'll do it.
Yeah.
If they've said it, they will do it. That is the whole campaign. So, but is that overstretched beyond a point?
So the government saying that is one thing. For a company, PSU, to actually go out and execute something which is so difficult is quite unfair.
At some point, the markets want to see the action, how much ever faith they put in. It's no blind faith.
No, I think it's if the bulls want to make something go up, we'll find reasons and justifications to do it. Now we're a little nervous, so suddenly there are concerns about execution, there are concerns about valuations, frothiness in the market, but the fact remains, like Niraj said, the broader market may be a sell-on rally, but the large cap now continues to still remain a buy on dips. Now, what we call a dip is anybody's guess, but just to put this in perspective, we've actually gained for the last 4 consecutive weeks, so it's not as if things are looking as rough just yet. Implied Nifty is indicating to a marginally higher start, but like we said, this is going to be a week of consolidation, a week of minor profit booking, largely because the last couple of weeks have actually been pretty good for the street. It is going to be all about stocks. Let's start by talking to you about the large cap names that are going to be in focus this morning. A few weeks ago, remember, we saw a big sell-off take place on ITC on some comments coming from British Tobacco Association, which indicated that they would look to reducing the stake in ITC. The BAT owns 29% stake in ITC. There were reports, like I said a few weeks ago, that they were looking to reduce that to 25%. The stock got nervous, investors got nervous, it briefly dipped below 400 rupees as well. Jefferies even downgraded the counter from buy to hold. And of course, that was it. But what we had seen this morning or yesterday was there were a fairly big trade block that took place on ITC. There were also reports in Bloomberg indicating that BAT was looking to exit or reduce their stake in ITC this week itself. Now, whether this block deal was BAT lowering their holding in ITC is anybody's guess, but the stock will see some sort of reaction to that news this morning. Most analysts do believe that this is going to have no material impact on ITC. It could have a knee-jerk reaction in terms of price movement, but the fundamental picture still remains intact for the company. Well, that's ITC. A quick one And a couple of other big ones. SBI, of course, you heard all about this yesterday itself, but the stock continues to be in focus this morning. Went home with a cut of nearly 2%. The Supreme Court has rejected SBI extension plea, and it has directed it to furnish details on electoral bonds by end of the day. SBI had requested for an extension to give these details for June 30th, but it seems like that request has been rejected very clearly by the 5-judge Supreme Court bench. This evening is the deadline. It'll be interesting to see as how SBI's race against time to collect this data goes. The counter will be one that you want to watch out for on back of that. Apart from that, another M&A, another amalgamation. The board has approved the amalgamation of the wholly owned unit Aditya Birla Finance. The merger is subject to, of course, sanctions by the NCLT, RBI and other shareholders. This merger will help the company consolidate some of its businesses. There could be operational synergies, and this could result in expansion in the long term. No major brokerage is still coming out with their opinion on this amalgamation, but it'll be interesting to see how the street actually takes that, guys.
Yeah. Just on SBI, if anyone listened to that hearing yesterday, it was fascinating because they do have the data in 2 separate envelopes sitting in the Mumbai headquarters.
And they can't seem to find it.
So they said that we thought you wanted us to collate it. Who's bought the bonds and who's actually received it? So the Supreme Court has said, no, you put it out by the end of day today. EC will put it out on the end of day 15th March. So Friday is going to be interesting in trade because you will know which corporates across India have donated to political parties. You'll know which political parties got donations, and then, whoever can will match those.
You have a busy Monday morning.
SBI is going to be interesting. The overhang on the stock, though, is temporary. We were speaking to Pranav from Bernstein yesterday, who talked about how, as a proxy for public sector banks, he sees that valuation differential with the private sector banks is now closing in. So that's a different problem and a longer problem SBI has, which goes beyond this. But, SpiceJet, another one which may fly into rough weather. Well, so on the face of it, 2 management changes, the COO and the CCO. So that's the Chief Commercial Officer and the Chief Operating Officer have resigned from the airline. Overall, look at it in the context of what's been happening with SpiceJet. And also interesting, Arun Kashyap and Shilpa Bhatia, who are these 2 officers, have resigned from the airline and joined back earlier as well. Now, this time, various reports, some suggesting that they were asked to go at a time when this airline is trying to remake itself. At least Ajay Singh is pushing very, very hard to remake itself. You might see some turbulence on the stock today, as well as you did yesterday, and contrasted with what's happening with an Interglobe, which is on an up and away. So that's one space I would watch out for. The others on my list would be, say, an RVNL. Yeah, that's Interglobe for you. RVNL would be the others, on my list, and 2 order wins that, RVNL is saying. One is a construction order from Maharashtra Metro Rail Corp. This is about 339 crore rupees. And overall, this consistent performance that we've seen from RVNL has been good. So even as the whole capex pushed growth might stutter, RVNL's not done too badly, and I would watch out for that. Jupiter Wagons is another one. Their order book now, north of about 7,000 crore rupees with their latest orders as well. That stock was seeing a little bit of pressure yesterday. Last 3 months is still down about 16%. They've got a 957 crore order from the Rail Ministry, and that's just the latest of their order book. So these two or 3 pieces looking okay to watch out for today. Yeah,
Niraj? Yeah, most certainly. So these are the key newsmakers. Then there are some reports and bulk deals. It's just that kind of a day which is not so news heavy. Of course, we'll keep an eye out for the iron ore linked stocks as well, because remember, after the plunge yesterday, is there some follow on onto a Vedanta and MDC? So we'll keep an eye out for those. From amongst the brokerage notes, 2 things that stood out. One, and I'm sure we'll cover Adani Ports in a moment from now, but City on Sona Comstar, and ignore the target prices, etc. But the commentary seems pretty interesting. They are saying in the conference that they held yesterday and presumably today, Sona Comstar would have been one of the companies, and they're saying that they note that the management has said that revenues for Sona will double over the next 3 years with strong margin trends. Normally, investors love companies which could double revenues in over 4 years. Here, Sona Comstar is saying they'll double revenue in 3 years. They said that the management noted that the company's revenue, one could double over the next 3 years, but profitability trends were also expected to remain strong, and traction motors for buses could boost revenue post 3 years. So the management even guided to what would happen post 3 years. Now, keep in mind, Sona is an extremely expensive stock, so be careful. The timelines that brokerages like Citi might have for their clients would be very different from what you may have. So please do your own research, but this is the Citi view on Sona, and just the fact that the revenues could double over the next 3 years was interesting. The other one is Praveg. Promoter entities gone out and sold 7 lakh shares at 850 a share. Usually this doesn't account very well, though 7 lakhs is probably not a big amount. But the buyer is also interesting. Goldman Sachs India equity portfolio bought about 5.3 of those 7 lakh shares at 850 per share. Watch out for Praveg, could be an interesting one to monitor in the session today. Watch out for some of those stocks which saw some decent price and delivery-based buying action. Aztec Life, NLC India, which was in focus yesterday because post-OFS no supply overhang, Linde India or Kalpataru projects, all of these had some very good price action, yes, but look at the volumes or the delivery relative to the 1 month averages. I think the delivery numbers were very strong, and therefore do keep an eye for some of these in case there's some follow-up buying. You've already seen some bit of buying happen in trade yesterday. I'm sure you guys have more. But anything else that fits the bill?
Just a quick mention on a listing, RK Swami. So keep an eye out for that one. That's a busy. It still remains to be a busy season. So clearly, money isn't drying up, guys.
Yeah. Just a couple of small counters. Before you wrap it all up, Niraj. HG Infra, I thought one we should look at. LOI worth 862 crores from NHAI. The National Highway Authority for a project in Andhra Pradesh, that might be interesting. And Aurobindo Pharma, I thought this World Health Organization approval they've got for their facility, again in Andhra, which will make a couple of HIV-related molecules. So Auro Pharma could have a pretty decent day, which is anyway, you've seen pharma in a defensive time doing not too badly yesterday.
Yeah, the other note that stood out for me, and I just thought I'll mention that, is the stock that may be in focus is Adani Ports. Now, apparently they would have taken some of the sell-side brokerages. So HSBC has come out with a note there. Motilal Oswal has maintained the target price, but I'm bringing out HSBC. We may not have graphics for it, but that's okay. They have raised the target price from 1370 to 1560, which is an upside of about 17%. So HSBC says that the robust throughput growth continued in Feb, implying that the company is on track to beat the 400 MMT target for FY24. This was under doubt at some point of time in the last year. Now they're talking about beating the targets. HSBC is lifting the EBITDA forecast by 1 to 4%, implying about a 19% CAGR on higher throughput assumptions. And they have, of course, reiterated the buy rating, but increased the target price on higher estimates, of course. So pretty interesting. And when the data came out for Adani Ports, we're all talking about that how there are some companies which are kind of shrugging off the global slowdown, linked to global economy, import export, and still giving out good numbers. So this one right up there. Standard disclosures, of course. The Adani Port, of course, owned by the Adani Group, and the Adani Group owns NDTV, and you're watching NDTV Profit. So that's the standard disclosure, but doesn't take away the fact that brokerages like HSBC and Motilal Oswal have come out with a positive note there.
Just a quick reminder that Niraj gave me as well. The Bharat Invit also listed on the exchanges. There was so much excitement around this one only a few weeks ago. So watch out for this one. This one and RK Swami are two listings that we've got lined up at 10 a.m. So it's going to be a busy morning, even though news flow is not coming in thick and fast, guys.
Most certainly. News flow, well, for a lot of these is very interesting. Let's see how some of these listings shape up. Remember, the few that have come in the recent past have been chalk and cheese depending on the subscription numbers. Let's see what today's companies do. But it's time for Editor's Cut. And Alex, I'm looking forward to you playing the devil's advocate on if it's even remotely possible to do that on metals today.
Yeah, in fact, I liked Niraj's headline for this particular one. He says, "No Metallica in sight." And I thought, why not stretch that a little bit? I'm taking full liberty here. I know that we focus on equities quite a bit, but it's sometimes important to turn the page because it's sad but true. Sometimes you have to focus on commodities and metals because nothing else matters. But all of that has a bearing on stocks as well. So let's talk about iron ore, which really is the reason why we're having this conversation this morning.
Let me do one better. Iron ore doesn't seem to be tailored for swift moves, Alex.
Oh, very good. But that's on the opposite end of the spectrum from Metallica. Having said that, let's talk about why we're talking about iron ore. It has to do with China.
Yeah, so yesterday's price move effectively brought us to think of metals and why they are in focus. So I'm starting off with iron ore, of course, but extending this to metals at large. So iron ore cracked over 7% yesterday, right? That's a large plunge. This was the biggest fall since mid-2022. Now, you would argue that with the kind of economic data China has given out, on any given day you could have such falls, but this was particularly large because it dates back 2 years, right? Because stockpiles in Chinese ports are highest in over a year. And in some sense, because of the Lunar New Year holidays, because economic activity goes down, you could argue that some of this would have been a result of that. Still, it made headlines, and still it made the prices fall. Still, Vedanta and NMDC corrected, so you got to bring it, because economic investors or investors should know about why this is happening. Now, one, muted demand. Steel demand in China is lagging too, because there is persistent pressure, as we all know, on China realty and manufacturing sector. And, this muted demand from China, and now the Indian implication or global implication, that muted demand for steel or other commodities in China could lead to Chinese authorities extolling the companies that, hey, go out and export. You don't want a glut here. And that may impact the pricing of some of these global commodities. In fact, I was reading a Gawekal research note, if I'm not wrong, or some other note which said this, or a Bloomberg story today, apparently, which said that Chinese authorities have told companies that go out and make higher exports because you do not want a glut here. Now, if that is going to be the trend, that you might see pricing pressure on global commodities abroad. So that's the first part, Alex, of what's happening to the underlying asset class, which is iron ore predominantly, or some of the other commodities, and thereby onto steel and some of the others.
So, but a counter to China, and of course it's not something that will pan out in the near term, but countries like Germany, for example, I was looking at a headline this morning, is looking to meet several countries in the Asian region with regard to ties and reducing its dependence on China. So while to a certain extent a slowdown in manufacturing, a slowdown in demand for commodities in China is something that we might have to bear with in the near term, with a lot of these countries looking outside of China to increase manufacturing footprint, etc. That could be resolved, I would think, in the medium term, right?
Maybe, but again, if the other countries have these manufacturing setups for Chinese production facilities which are set up already, they will have to export it somewhere. So that's part one. By the way, just before we move to the other corollary to this is that a lot of investors are starting to buy into China now, thinking that the worst is over. So there's a lovely story out there too.
Because the CPI print was better, yes.
Yeah, maybe. So maybe that changes. And that's the disclaimer, by the way, that these things on metals could change very quickly. Because one whiff of strong Chinese data and suddenly you'll see the metals zooming. So traders in particular, but investors as well, should keep that in mind. Having said that, two interesting notes that I saw, one on Chinese auto demand. Now, a lot of talk about how Chinese auto demand is very strong. Gawekal research has pointed out that two of the key markets that have powered the auto export boom in China are turning less favorable, with the European Union poised to levy tariffs on EV imports from China and the Russian market close to saturation.
Interesting.
Do we see Chinese auto exports starting to come under pressure? It's a question we do not know, but that could also further impact demand for some of the base metals. That's part one. Part two, real estate. And we know that it's under pressure, but the Jefferies note on real estate speaks about how the real estate SOE developers too have underperformed HSI by 20% YTD. And we know HSI hasn't done well amid sluggish sales, extended property price decline, and fading policy expectations. The physical market appearing unlikely to turn around in the near term.
Because that is the biggest overhang for China at this juncture.
And if that stays, Alex, it's very difficult to make a sustained case for metals and underlying metals and metal stocks starting to move up. So that's the other problem. Now, therefore, all of this, the crux of the matter is, what could it mean for India stocks and Indian investors investing in India companies? Because there are a clutch of very smart investors. Yesterday we had Abhay Agarwal participating in the China story via some ETFs. Some others are doing that too. So some people are doing it well and hedging their bets by going long China. What about investors who are in Indian metal stocks? That's the key question. Can they do well? Now, most brokerages seem to be aligned with the fact that stocks like Hindalco and Tata Steel, which are trading at roughly 1.5 times FY25 price to book, with 11 to 12% ROE, are trading at valuations much better than history, with capex having come on stream. In Hindalco's case, the downside because of the global issues being priced in and volume pickup likely might be good place to do. Now, these notes are from a clux of 2 or 3 brokerages which are constructive on Hindalco and Tata Steel
and these two counters
in particular. Now, they may still correct because the metal overhang may stay, but within the universe, these two seem to be more favorably placed than the others. We know that NMDC and Vedanta will hurt with the recent pressure on iron ore prices. So even if valuations are cheap, currently with iron ore doing what it is doing, and we'll monitor it today, by the way.
To see if there's a pop.
Yeah, so our news flash screen will be busy with what's happening in iron ore and other base metals. So that will determine the near-term trend, so not commenting too much on that. And the last piece is from amongst the larger stocks is JSW Steel. Now, the valuations are not cheap there at all by any stretch of imagination relative to any other company. But again, some very interesting capex done, has come on stream, will come on stream. Their guidance for volumes, 38 million tons in FY25 and even higher in FY26, means that higher valuations might be okay for players who are looking at a 2-year perspective, believing that prices will not correct too much from here because volume growth will make up for earnings, and that will make up for the slightly more expensive valuations than the others.
I'm obviously not going to be able to play devil's advocate to the extent that I will argue against this. But could it be that some of the excitement and some of the positive view on these counters is because of domestic demand? Because while we've talked about China, we're talking about several companies that have moved away from the export scenario to focus on India.
Yeah, I mean, a growing Indian sales presence doesn't take away the export output that would still be there for these companies. But near term, Alex, just that overhang will stay. That until China turns around the corner, you don't want to go out and bet big money on metals because the outlook just seems so volatile and uncertain. So why do that in such a scenario wherein there is an overall risk of maybe the market valuations also coming off?
So what's the underlying as well, and what's the underlying today because of the kind of crack you saw in trade yesterday? We've spoken about music and metal, but there's lots more to talk about before the start of trade, and you'll find all of that right here. We'll start with F&O after a very quick break. Do stay tuned.
back. You're watching India Market Open. Quick look at the implied open before we begin with, the understanding that yesterday also you were seeing a positive implied open like you are today. But once market opened, the picture changed a fair bit. We'd seen a day of range-bound trade. Now, some of that, I would say, sitting on the fence also coming from the F&O space. And Agam is joining us for more. Agam, Fin Nifty expiry today.
Yeah. And it's going to be an important one because we've started to see some amount of weakness return to the banking indices. But, that said, and it's of course also weighed on the Nifty too. That said, let's start by taking a look at what's happening in the future space. At the moment, we are looking at a decline of around 0.7% for the Nifties underlying. And largely wind trend of what we've seen in the past 7-8 days, we've seen very little change in open interest as far as the Nifty futures go. And the Bank Nifty, on the other hand, has seen unwinding. So the Bank Nifty futures see unwinding of nearly 7.5% in open interest, and even as the underlying comes off by well over 1%. So some amount of weakness has come back into the Bank Nifty after we saw it perk up a little in the last week. Now, coming down to the options market, naturally, when the Nifty falls, that also means that because of that, consequently, we saw a little more writing around the 22,500 call. And naturally, a little bit more unwinding as far as the 22,300 and 22,400 puts as well. But where does that leave us when it comes to your max OI? What kind of a rough range are we working with? So based on the kind of moves that we saw on the Nifty yesterday, the resistance around 22,500 strengthens further, which was evident because we saw a little more call writing there around that strike. And on the lower end, well, the markets are yet undetermined as to where they want to find a support. But I reckon to a certain extent, considering 22,200 has been a little bit of a pivot point of late, that could likely serve as a little bit of a support area, but not a very strong one at that. That said, let's talk about the Fin Nifty. And Fin Nifty, of course, we're keeping an eye on 20,900, 20,000, or rather 21,000. Fin Nifty, again, it's always going to be about very, very contracted premiums on the day of expiry. And because of that, there could, in fact, be a lot more choppiness coming through, even if the choppiness is, very, very range bound. And it's something which is characteristic. But moving on, let's take a look at all the stocks which are in focus today. So Interglobe Aviation, Siemens and ICICI Prudential looking at longs. On the short side, Apollo Tyres and Balakrishna Industries looking at shorts. And we did have a bout of short covering for Pidilite and Cholafin. Tata Chemicals losing substantially yesterday. That was down around 10.6%. A profit taking in SAIL and MGL as well, which also saw long unwinding coming through. But the question really is, what do we do with the data that has been presented to you? And even as the indices, or rather the Nifty at least, takes a step back from life highs, how do you address this and what would you do with this? Well, let's get an expert here. We have Shivangi Sarda of MOFSL joining us at the moment. Shivangi, good morning. Thank you so much for joining in. Your reading of the benchmarks and how are you addressing them?
Good morning. Thank you for having me. So we have seen that, the Nifty, even though it touched a new lifetime high level yesterday, it did witness a slight profit booking at higher zones. But the good part is that it is still respecting its higher zones. Also, the global markets were, somewhat down, and which affected our markets as well. Support-based buying can be seen, even at these levels, and Nifty is holding on to its crucial support on the immediate basis. So 22,350 would be a make or break zone over here with positional support of 22,222 levels. This would be important to watch out for the rest of the day. And for the upside, we are looking at 22,750 on the upside. Now, talking about Bank Nifty, this has negated its higher lows formation of the last 6 sessions. And we've seen that there has been some of the, heavyweight counters which have, added on to the weakness in the previous session. So even though it is holding above its 50 exponential moving average, we've seen some sort of slack over here in line with the, weak global opening yesterday. So even though the banking index had started off on a very positive note on this series, we've seen some sort of short built up in the previous session. So we are looking at, the crucial level of 47,500 zones. So it has to hold above these levels for then an up move towards 48,000 zones. 47,000 would be a crucial support, which would act as a make or break zone over here. So it needs to surpass 47,500 for any strength to again regain over here.
Okay, fair enough, Shivangi. So why don't you tell us about ICICI Prudential? I believe that is the first one on your radar today.
Absolutely. In such a kind of a market, we need to look for stocks which are holding resiliently strong. ICICI Pru is one of them. And on the, week-on-week basis, we've seen that from the last 6 weeks, consistently support-based buying has been visible over here. Stock is adding good volumes over here, which makes it quite attractive. This price volume surge is going to take the stock higher. So we are recommending a bull call spread over here by buying 600 call and selling 610 call with a cost of around 4 points and a maximum reward of 6 points over here. Now, the second pick on my radar is HAL. This stock has absolutely panned out quite well in this entire rally. And we've seen that there has been a breakout from the Poland flag pattern formation on the weekly basis and a very strong follow-up thereafter. Consistently, the stock is holding on to its key exponential moving averages as well. And RSI is also signifying that these, higher zones are going to maintain over here. So we are recommending a bull call spread over here as well by buying 3380 call and selling 3400 call with a cost of around 7 points and a maximum reward of 13 points over here.
Okay, so two bull call spreads, two debit spreads being played for the positive, one in ICICI Prudential and the other one is in Hindustan Aeronautics. Well, on that note, Shivangi, thank you so much for joining us and taking us through your views on the markets as well as giving us a couple of trading ideas. And with that, it's back to you, Samina.
Thank you, Agam. In fact, HAL has been seeing quite a bit of buying even on back of a fundamental news trigger where they backed a pretty massive order last week. So the stock was around 3,420, eased off a little bit in trade yesterday, but solid gains. It's up 20%, nearly 20% in the last 1 month and still looks good on the charts. A quick check on implied Nifty before we quickly move across to all the stock-specific action that we are tracking in today's day of trade. It's expected to be a marginally higher start, but like Tamanna indicated, we cannot rule out the markets moving into consolidation pretty much from the get-go this morning. Well, Anushi is standing by with more details on all the stocks we want to track this morning. Anushi, what do you have on your list this morning?
Hey, morning, Samina. A couple of stocks in focus today with ITC being in the top news. Now, over here, 12 million equity shares, or rather 0.09% stake, changed hands in a large trade as per Bloomberg. This is amid the reports that British American Tobacco is preparing to offload shares over here later this week with a potential divestment size of about $2 billion to $3 billion through multiple block trades. It is to be noted that BAT currently holds about 29% stake in the company, and it is looking to monetize its stake in ITC in order to enhance its balance sheet flexibility going forward. So ITC remains in key focus. Now moving on to Imagica World, the company is planning to set up an entertainment destination in Ahmedabad with a project investment cost of about 130 crore and is looking to commence this operations in the next 2 years post the requisite approvals. So that is on Imagica. Now moving on to the auto space, M&M is in focus after its Feb 24 business update, in which they have recorded about a 26% uptick in its production and about 26% uptick in its sales as well, while the exports did face some heat over here with about exports being down about 32%. So that is on MMM. And last on the list is Interglobe Aviation. While this was a news already, but just a reconfirmation on this, Rakesh Gangwal sold about 2.25 crore shares, which is about 5.8% equity. But what is important over here is Morgan Stanley picking about 0.54% stake in the company. So these are some of the key stocks which are definitely going to be in focus today.
All right, thank you for that, Anushi. That's the list of stocks on Anushi's radar. Meanwhile, exclusive story flashing on your screens. SBI will be giving its details of its electoral bonds by the end of the day. The court has mandated them to do it, and those sources essentially saying that they are ready with the data. It took them time because they were mapping it. This is something they've said in court. Remember, SBI under a bit of pressure after that rap on the knuckles. Nirav, head of equity research analyst at Lathan Manharlal Securities with us today. Nirav, very good morning to you. Tell us whether you think the market's going to be in a better mood today. Tata Sons IPO still, up in the air. That concern remains. Do you see a rebound in Tata stocks today?
Yeah, good morning and thank you for having me on your show. First of all, starting off with yesterday's developments, I think quite a few mood spoilers for the market. I think first is, of course, the SEBI comments regarding the froth and the froth in the market, the possible signs of manipulation, etc. And what has been recommended, the stress tests, which are to be declared by March 15th, I think that is likely to impact the time taken to exit the positions in times of stress, especially with respect to small cap funds as well as the mid cap funds. Now, what the markets will look forward to is what is the possible outcome of these stress tests, what is the quality of these stress tests, and at the same time, what corrective action will be recommended by SEBI, whether it's going to be a harsh action to these tests, or what is going to be, or is going to be a kind of a diluted action to these tests. So this is one factor. The second factor is that the bank Nifty has also been under some sort of pressure because certain downgrades which have come in with respect to HDFC Bank as well as SBI. And the third factor is the Tata Group reconsidering its IPO for Tata Sons. So I think all these have been kind of, they've spoiled the sentiment for the market, at least in the short run. In a way, if one were to look at it, I think that SEBI's comments could also be a warning sign that there is definitely signs of froth as far as the valuations are concerned, and these may get converted into a bubble which could escalate problems for the market. So I think it's going to be a very, very cautious stance as far as the markets are concerned, at least as far as today is concerned.
It seems like that, at least. Remember, the small cap index was down 2% yesterday, down 8% from its highs, and cautious is what is probably the best way to describe it. Akshay Bhagwat, Senior BP at JM Financial, as well joins in. Akshay, what is the call on the markets? We seem to be consolidating for most part of this week. At least that's what the street is expecting. What is the trading range, and would you initiate a strategy at all on the Nifty or Bank Nifty?
Good morning, Samina. So yesterday's trading action saw a slight correction. It was more on long liquidation in the futures and options segment. And if you look at the kind of resistance which the 22,500 level is building up for the short-term scenario, there was a lot of call writing positions in the options segment, which saw a slight cap on the upside in the current proceedings of the market. My sense is that there can be an extension of this correction. 22,200 on the technical charts is a very important pivotal zone for the market. We need to check how the market behaves at the support point. The chances of those levels getting tested in today's market itself look high. I would be very keen at how the market reacts, because that is a make or break level as far as the short-term trend goes for the Nifty index. So 22,200, be ready for those levels. If it breaks, then 22,000 comes into picture with a slight negative texture for the remainder part of the March series.
Right. Well, that is the trade on the Nifty and Bank Nifty. But let's move on to an NDTV Profit exclusive. Sources tell our channel that the State Bank of India's ready with electoral bond data ordered by the Supreme Court. Vishwanathan Nair joins with more details on this. Vishy, it is a race against time, we believe. This evening is the deadline, but what are your sources telling you?
Right, Samina. So what our sources are telling us at this point in time is that State Bank of India is ready with that information, and that the Supreme Court has sought as part of its order. They can submit that information a little later today, maybe in a few hours, is what the sources are telling us. What information they have is regarding the people who have purchased these electoral bonds and the amount that they have purchased, and they have the information of the political parties which have gone ahead and redeemed these electoral bonds. However, the mapping between the two, as in which customers funded which political party. That part is not yet completed. And this is something that State Bank of India mentioned in the Supreme Court hearing yesterday as well. But since that the Supreme Court has not specified that mapping needs to be done, the State Bank of India is saying that they have the information and they're ready to submit that data with the Supreme Court. The customers who have purchased these electoral bonds were covered under anonymity till before the Supreme Court order that came in February. So since then, now with this order in place, these customers cannot claim any anonymity further, and that this information will be disclosed first to the Supreme Court and then later by the Election Commission to the broader public.
Absolutely. The State Bank of India chairman also has to file in an affidavit, and perhaps some of these things will make their way to it. Remember, in court yesterday, it was made clear by the Chief Justice of India that mapping the two sets of data, who bought and who received, was never the mandate that State Bank of India had. So you can expect that data today. Thank you for that, Vishy, there with all of those exclusive details. Akshay P Bhagwat with us. Akshay, let's get your take on State Bank of India and some of the PSB pack, which saw quite a bit of pain yesterday.
Yeah, so I agree. State Bank of India, there's a slight corrective action which kicked off from yesterday. It has been in a very strong uptrend in the last couple of months, and the kind of profit booking it might witness because of the slight news which is making its way, might see a downside till around 750 to 755. So that's the support level which I'm looking at from the price chart setup. So yes, slight dips can be expected, but broadly the PSU Bank structure is still strong. And State Bank is one of the strongest chart structures. So I'll be keen on buying this on a dip. 750 to 55 is the level. Keep a watch on those levels for buying on dip in State Bank of India.
Now, before we get in Akshay's calls, and at about 8:50 we'll do that, Nirav, I want to come to you. Usually during periods of fear is when you get good prices. Now, State Bank of India, here's a classic case of a bank which is trading at comparable ROEs to the private sector biggies. And from the looks of it, the next 2 years, the growth rates are likely to be higher than them as well. And it's available at nearly, if not half the valuation, maybe at a 25-30% discount at the very least. Why should somebody not buy a State Bank of India?
Yeah, so definitely, as you said, it makes perfect sense from a valuation perspective as well as from a quality perspective. It's one of the leaders in the country. It's got one of the largest branch network, the best profitability ratios, and the valuations are also quite attractive. So I see no reason why one should not enter into this stock in this time of stress, especially. And regarding the electoral bonds issue, I think the earlier this gets resolved, the better it is for the reputation of the bank, especially at a time where banking stocks, private sector banking stocks, have been struggling. And this is, of course, a golden opportunity for PSU banks to really capitalize on the opportunities which are available.
Point well taken. So viewers, that's the coverage. Now, let's first get in Akshay's stock ideas. We'll then at length talk about ITC as well. But Akshay, to you first, your stock recommendations for the morning.
Yeah, so a couple of stock recommendations which I have. Still, my positioning is on the buy side of the market. The first trade here would be in SRF. If you look at this, the broader chart structure of SRF, it's seen a consolidation break, a range break of around 2400 a couple of sessions back. Yesterday was a muted session for SRF, but the entire setup makes me believe that this stock is setting up for a major breakout above the level of 2525. So right now, slight conservative targets till 2515 is which I would look for from a trading perspective. Keep a stop loss of 2418 on this trade, and the major breakout point would be 2525, which will set the stock on a long-term trajectory on a positive note. So right now, a positive view by SRF at the current rates. The second trade here I would mention is HPCL from the oil and gas sector, which has had an excellent run-up and been a little of momentum lately, but my sense is momentum will regain. It is trading at its moving average support at 500-505. Yesterday it did see a positive rebound. The targets which I look forward is 545 from the short term in HPCL. Stop loss will be 484 on this trade.
Akshay, Nirav, stay with us. We'll take a quick break. We'll come back. We'll talk about ITC as well. That's going to be the big one to track this morning. We'll come back. Stay with us.
Back with India Market Open right here on NDTV Profit. We are in conversation with Akshay Bhagwat on the technicals and Nirav on the fundamentals. A stock that will clearly be in focus for maybe the better part of this week would be ITC. Now, news reports suggest that BAT might be selling out or selling, not selling out really, selling a small percentage or a small sliver of its stake in ITC over the course of this week. Could it cap any kind of upsides on ITC? Could it open downsides on ITC? And either of the cases, what should you do fundamentally with ITC? Let's talk about all of that. I'll first start with how the chart setup is looking out here. Akshay, have you observed ITC in the recent past?
Yeah, so if you look at the price setup of ITC in terms of price action, clearly it's been subdued. There has been a lot of short build-up as well as selling action since the level of 470. But the silver lining here is that 400 is a possible level where a bottom is evident. The last few days of trading action is clearly suggestive that there is buying slowly seen around the level of 400 to 410 zone. So a support is in place. It's just about a matter of time whether the level of 415, which is a possible breakout zone, matures or not. If 415 breaks, you will see some bit of a momentum getting back into ITC, where you might see level of 425 to 430 on the upside. Still, we are not out of the woods. So from a trading perspective, I would say keep a conditional buy, let 415 cross, then only the buy triggers. Till then, keep it in a wait and watch. In case 400 breaks, then the pain should continue on the broader chart setup for ITC.
Nirav, if there is some more pain, what would your call be on ITC? Because frankly, in the last 12 months, 5% return, the new ITC is behaving much like how the ITC used to behave, which is go nowhere. What do you do with an ITC fundamentally?
Yes, typically ITC is a slow burn, so I think it requires a lot of patience dealing in this stock, and I think the stock has been under pressure. I think we've seen the peaks already, and now with the BAT coming to sell a few shares in the market, of course, the stock is likely to be under pressure, and I think I would like to look at levels of around 370, 375. For the stock. And another important factor will be to watch the results, the quarterly results. What is the commentary which is coming from them? Because the cigarette volumes have not been that great. The paper business is also under some amount of pressure. FMCG also, we've seen general FMCG scenario is not that great. So I think it's the hotels business which has been doing the heavy lifting, etc. So I think on the fundamental front, on the result front, also not great results. And I think that is also one of the reasons why the stock price has come under pressure. So I would be in no hurry to buy the stock. Wait for it to correct from these levels before making a decision to enter the stock.
Akshay, a couple of stocks I want to pick up on from yesterday's trade that have done or been in focus. You had Godfrey Phillips that actually did a 10% up move yesterday. I'm not sure if you track this one. If you do, it'd be great if you can tell us how you feel about the stock today. And also along with that, I'm going to bring up HAL because it was also a buy call by another analyst this morning on the show. Seems like it's in uncharted territories. There was a big order win last week, and now technically on the charts as well, it looks compelling. Do you agree, Godfrey and HAL, your view on both those counters?
Yes, Samina, Godfrey Phillips has been on a dream run, you can say. A very stellar move broadly. If you see, there is no stopping the stock right from the levels of 2200 to 3637, where it closed yesterday. On the charts, yes, it's a bit overstretched for comfort to take a fresh entry at the current zones. The momentum is strong, so you might see levels of 3750 to 3800 on very soon. But for a fresh entrant, the suggestion would be wait for a slight dip around 3400, 3450 levels. That would make it more sensible to take a fresh buy trade, the kind of momentum Godfrey Phillips is in. So positive view, but wait for dips for a re-entry. And as far as HAL goes, yes, this stock too is in a firm uptrend. It is kind of overbought a bit. So again, for a fresh entrant, the suggestion would be wait for a slight dip. 3200 is the support one should look for in this stock. And the broader targets I would see is around 3450 to 3600 from a short-term perspective. So both the stocks, yes, technically very positive, but buying on dips is the suggestion going by the current market setup.
Right. Nirav, RVNL, have you been tracking this one fundamentally? Yesterday there was a big order win from Himachal Pradesh. A few days ago it was Madhya Pradesh. This morning as well there is another order win. The stock as well is doing quite, is stable. Are you constructive on RVNL at this stage?
I'm constructive on the stock, but I think this stock will still remain in a very narrow range because it's already made historic highs and it's come down a bit. And if you look at the guidance, they've clearly indicated that they want their order book to come near 75,000 crores. And the idea will be to achieve a revenue of around 25,000 crores per annum. With margins of close to 8%. So if one were to just extrapolate that, I think everything is there in the price, at least at this point of time. So these order wins, if one were to take the larger picture of 75,000 crore order book, are in line with what is expected by the market. So yes, they've won orders worth around 1,140 crores in the last week, and yesterday this order win. But I think it's all there in the price. So at most you will see some 4-5% movement in the stock. That's about all.
All right, so it's all there in the price as far as RVNL is concerned. That's what Nirav is saying. Akshay, your take on an RVNL? Let me add a Jupiter Wagons to it. Both with news flow today?
Yeah. Firstly, on RBNL, if you look at the rail counters, they have been off momentum in the last few trading sessions. But one thing is pretty apparent in most of these charts is that they are in search for a possible bottom. Now, in case of RBNL, 225 to 230 is the zone where you are seeing some kind of buying demand in the stock. Yesterday, yes, it opened gap up, but it did not sustain to its gap up openings. But the broader chart structure is suggestive that 275, 280 might be on in RBNL. You just need to give some more time in this trade. It's not going to be a momentum pick for you at the current rates. So a positive view from a trading perspective, 230 is the base, 275 would be the upside. And as far as Jupiter wagon goes, a similar chart structure for Jupiter wagons, support at around 325 and resistance at 400. It's more in a range bound scenario. My better pick would be RBNL over Jupiter wagons, considering the chart setup which RBNL has over Jupiter wagons.
Pre-open rates, first cut and first look of them. Of course, these will settle. I'm seeing Adani Enterprises up. Let's pull up ports as well. Adani Enterprises maybe in focus today because movement on the Dharavi redevelopment story. Standard disclaimers, of course, and those will settle. Akshay, is, from that clutch of stocks, Adani Enterprises and Adani Ports, anything that you're tracking right now?
Yeah, so Adani Enterprise, the long-term charts are absolutely fantastic. It's just the short-term which is more vulnerable to price fluctuations. But yesterday it has closed at a support zone. The support is around 3,200. Short-term moving averages to converge at this support point. And plus, as you rightly mentioned, there is some positive flow in this counter. So the sense is it will stage a rebound today. Traders can consider support of 3,200, have their stops below 3,200 and play for the recent swing upside till around 3,350 to 3,400. Long-term investors can continue to hold the stock. My sense is all-time highs of 4,000 would be eventually hit. Just a matter of time of maybe 2-3 months. But there's where I see the stock heading for.
So all-time highs of 4,000 is just a couple of months away. Power grid is at the other end of the spectrum. And Nirav, I wanted your take on it. It's been, I would say, languishing last couple of sessions you might see another rocky day for power grid as well. Why do you think that we are seeing this bout of weakness, and do you see a turnaround anytime soon?
Yeah, so typically power grid has always been a kind of a slow mover in the market, and last time around I think we did see the stock being stuck up in the range from 200 to 230, and now it's come to the 270 levels. And here also it's likely to struggle. But the fact of the matter remains that on a fundamental ground, there's been a lot of activity on the T&D front, that is the power transmission and distribution space. So sooner or later, of course, we will see the momentum catch up again in the stock. But it will be a slow mover. That's for sure.
Okay, well, it's traditionally been that way. Never mind what's happened in the last 6 to 12 months to some of the power names. So, yep, can understand that. Okay, a slew of brokerage notes that have come out predominantly on Adani Ports and Aditya Birla Capital. Harsh Sata Johnson with the rationale behind some of these views. Harsh, what are brokerages saying about both of these?
Well, yes, in fact, a ton of brokerages coming on Adani Ports, so I'll try to cover that first. One is we have the City View coming in, which seems to suggest that the strategy for Adani Ports is to grow the sticky cargo business by providing customized services. And strategic JVs with larger customers is basically the focus for this particular business. Not many M&A opportunities, that's the sense coming through from the City India conference as well. But they believe that domestically, while M&A may be slower, the net debt to EBITDA number of around 2.5 times, which was the goal, the guidance, has already been clocked. So they call that as a positive, and they believe that the logistic business is now going to or becoming of a good size and is growing fast with healthier margins. Just to build on that, I'm going to lean on the Motilal Oswal report as well. They believe that In terms of cargo volumes, Adani Ports has been a beat with regard to FY24. Their own guidance in Q3 was in fact revised. They believe that guidance will also be beaten. Motilal as well as HSBC believes in that particular metric. Also, they believe that Motilal believes that building infrastructure for stronger future growth in the logistics business is the current focus. The improvement in margins have been sharp. 2018, we saw margins around the 17 to 18% mark, currently at 29 to 30%, and as it scales the logistics business, this should continue to grow. They have increased their target multiple from 16 times EV/EBITDA to 17 times, thereby increasing the target price to 1600 as well. Also, HSBC 1560 target price, and they've increased their EBITDA estimates by 1 to 4% given the volume which will go up. Quickly switching focus to AB Capital. Equal weight rating by Morgan Stanley. They believe if RBI approval were to come through, the holdco discount in AB Finance will go away. They've given a 20% holdco discount to AB Finance, and they believe that going away will give it a target price of 218. They continue to maintain the 190 target price, so they've not changed that. RBI approval still awaited on this one. Jefferies, very similar view. They've hiked the target price from 200 to 225 on similar grounds, but they've actually made that hike immediately, and they believe that the RBI approval should come through and everything should flow smoothly with regard to the merger.
Okay, well, thanks, AB Capital. And seems that on the pre-open session, still a couple of minutes left, of course. But Harsh, thanks for putting both of those into perspective. But seems like AB Capital could start off positively. It was one of the stocks that Samina highlighted on a trade setup as well. I should try and bring up Adani Ports as well and just see if these brokerage notes are having an impact on that stock as the pre-open rates are settling now. Not so much, but on AB Capital, certainly. Nirav, I don't know if we spoke about AB Capital. I know we did speak about the broader financial space, but this one in particular, again, has not been a ranked outperformer or anything. If anything, has probably lagged, if I'm not wrong, relative to some of the others. But at a point of time when financials are not necessarily the most buzzing thing in town, would you go out and invest in AB Capital? If so, why? If not, why not?
Basically, we are looking at AB Capital as well as L&T Financial Services, but that is with a long-term horizon, because I think minimum 1 year horizon is required if one were to enter the stocks, because the interest rate cycle, etc., it might take some time. So I think it's a wait and watch game as far as the NBFC stocks are concerned. So we would definitely like to look at them, but with a long-term perspective.
That's the word coming in on AB Capital. ITC, if we can just quickly check what it's doing in pre-open trade. There is, not too much of a reaction, even if BAT is looking to exit the counter. When, of course, this news broke 3 weeks ago, the stock had already done a little bit of a dance then. So you're not seeing too much pressure on that stock in early trade or pre-open trade this morning. SPI, if I can pull that one up and see what it's getting up to. The stock, not too bad again, 0.5% off on SPI. So you don't have too many big cuts coming into markets, being very stable and mature in terms of reactions, at least this morning. Akshay, you've already talked about your stock picks, but if I want you to comment on a few more names, anything on the metal pack this morning? Would you have a trading strategy to play metal stocks, either on the long or even on the short side, really?
Metals sector started off the March series on a very strong note. But if you look at the last couple of days of trading action, the momentum has been off in most of the metal names. There has been profit booking, which is evident in the futures and options space. So if you are keen on the metal space here, only a couple of names come to my mind which have a good chart setup. But from a medium-term perspective, one will be Jindal Steel and Power, which is almost trading near its lifetime highs, a strong breakout seen a couple of weeks back at the level of 790. So a slight dip around 815, 810 would be a good buy from a risk reward perspective. I would see this stock again sailing north for targets of 840 to 850. And Vedanta would be another stock here to keep a track on. It's been news driven, but slowly it is trying to attempt a breakout above the level of 290. Whenever it does, that's your buy trade. That's the point where the momentum kicks off for targets of of 325. So conditional buy in Vedanta and buy in Jindal Steel and Power on a slight dip would be the two top trades from the metal space in the current chart setup.
Interesting to see what's happening in pre-open. Pre-open rates have now settled, but to the entire Tata Group stocks. And Tata Chemicals not too bad today relatively. Tata Investments still, having a tough morning, but Tata Chemicals just about 1% down. Tata Investments 5% down. Interesting to see the rest of the pack, what's happening with the Indian hotels, what's happening with the rallies, what's happening with the Tata Motors. And maybe you will see today some of that pullback after a complete day of drubbing, because IPO, no IPO, at the end of the day, there was nothing concrete behind that whole, set of events. The deadline, if it, does not change for Tata Sons to list, and if they do manage to skirt it, they have enough time to do so. So nothing fundamentally changes. Nirav, would this be, time to maybe go a little shopping as far as Tata Group stocks are concerned?
No, difficult really, because there is that uncertainty element which is there, and already we've seen a run-up which has happened. So I think it will be, we would not want to chase the momentum at this point of time. Wait for things to settle down, wait for some more clarity to emerge before we start dibbling into these stocks.
Tata Investment, for all the right reasons, is starting to come off a bit, and mind you, I say all the right reasons just because the value of the market cap of the company relative to the value of the underlying holdings way lower now, and no clarity around whether that is the entity which will be involved meaningfully in the setting up the semiconductor units or no. It's a bit hazy out there. So 2 days on a trot now, we've seen this stock down about 5%. Let's wait and watch what happens more. Now, among stocks which are doing well, and not too many by the way on the BSE 500, the top gainer is Motilal Oswal, which is an illiquid name and up only 3.8%. Otherwise, some fairly muted gains for stocks by and large. The one that stands out for me is Lodha, up about a couple of percentage points at 1200 and doing okay. So watch out for that one too. Some of these names could be active as the course of the day. Nirav, Asher, what would be a fundamental idea that you would look and buy, not necessarily put all 100% money to work currently, maybe do it in a SIP format, but is there a name that you like and why so?
We've been looking at the semiconductor story, and as you said, there's no clarity with respect to the Tata firms, but there's definitely one company where there is clarity, that is CG Power and Industrial Solutions. And this has been a classic turnaround story, which we've been tracking from double digit till date when the stock is close to 470 levels. And I think the Murugappa Group, having invested in this company and classic turnaround case, they have a very strong pedigree of products in the T&D space, motors, etc. And I think their entry into the semiconductor space, in a way, could be a game changer. They're planning to invest close to 7,600 crores over the next 5 years. So this could be a very, very strong story in the making. In a way, this is a diversification strategy of the Murugappa Group. So I think we would be keen to start investing and looking at that stock very, very closely.
Right. Last calls, Akshay, let me come to you for quick last calls on what you're seeing in the market. I mean, very initial trends are showing that maybe another decent day relatively for real estate. Some hospital stocks are buzzing, but otherwise muted and quiet. Anything that you're picking up, Akshay?
Well, markets might remain muted. There might be a pain point in the mid cap and the small cap space today. Defensives might play out. So keep a watch on hospital counters, the healthcare space, and like the Ipca Labs, Metropolis. These might do well. And even FMCG selective names, Nestle, Colgate, Palmolive. These are charts with strong setup. So defensives is the name I would like to chase for day trading, considering the broader setup which the Nifty has.
What defense? So, Akshay, I don't know if I missed what you were trying to say, but is there one top call for the day today?
Well, I believe Colgate-Palmolive, if from the defensive space here, looks pretty promising. It has held strong, built a support at 2,500, setting up for a breakout about 2,600, possibly 2,675, 2,700 is where the momentum might take this stock to. So from the FMCG space, Colgate-Palmolive would be my top bet.
Okay, so Colgate is the day trading or the positional trading idea, but ideally something that Akshay would probably want to trade today. He's betting on defenses for the day, and frankly, looking at the spate of gains at the BSE 500 at the end of the pre-open session, that might well turn out to be a good idea. It's just betting on defensives, that is, because the gains are very, very muted at the broader end of the spectrum, maybe even for the large caps. Here come the first trades this Tuesday morning. As the markets open up, expect a flattish start. Don't think there'll be too much different. Yes, flat for the Nifty, bobbing between the red and the green, so it's that flat really. Look at that. The Nifty Bank too, flattish, held out for the last 4-5 days, was correcting a bit yesterday, but currently okay. Bring up the mid caps and the small caps. The pain has been in the small cap space, and I wonder that it's continuing or no. Mid caps are okay, small caps are flattish too. Well, a sigh of relief for the small cap investors in the first 1 minute though. Never know how it will change. Bring up the heat map and show you what's moving, if at all anything, in the large caps. Well, let's start with the losers. ITC deserves a mention. That news is well known. 1.33% is bringing down some of the other FMCG names, by the way, along with it. So HUL, Britannia, Nestle, the top 4 losers are FMCG stocks which are correcting. So, well, maybe the defensive bet isn't working. Let's see if Colgate-Palmolive would be working. That's a separate kettle of fish, maybe. More green than red on the screen. That's the other part that you should keep in mind. And then look at the gainers. Adani Port, by virtue of those brokerage notes. And the fact that if the business can beat the target that they'd given for volumes at a point of time when the global economy isn't quite perking up as yet, that's commendable. So 1.25% higher. BPCL, I don't know if this is linked to the belief that when the election dates are out, OMCs might start rallying again, but maybe the market is preempting that. I couldn't spot a reason for BPCL to be up today, but up 1.34%. TCS Infi marginally in the green, so IT may be putting up a bit of a fight, but that's about the takeaway on the index. ITC on the losing side, BP and Adani Ports on the gaining side.
The Tata Group stocks will see a bit of a reverse in mood today. You're seeing at least TCS, Tata Steel, Tata Motors in top row. Let's start with Tata Chemicals in that case and look at what's happening there. Tata Chemicals, Tata Investments, that whole host of stocks, Tata Tele as well. To see whether you're seeing that mood reversal, not so much in Tata Chemicals, relatively okay, but 2.5% down still in opening trade. Remember, but it had run up nearly 36-40% in the 4 sessions last week on the back of, at the end of the day, nothing. Tata Investment also continues to be 5% down. JM Financials and IIFL Finances, the other 2 stocks that I want to see what's happening with them. Wow. So you're seeing a reversal of mood over there. The regulator lens, again, mind you, hasn't changed, but perhaps you've been beaten down enough. And now a value hunt beginning in some of these financials. So 1.5 to 2% uptick there. RVNL and Jupiter Wagons are the other 2 we should look at. Order win, enthusiasm there. RVNL more so than Jupiter Wagons, completely flat really in the large picture. But RVNL there with a Mumbai Metro order as well, looking decent in opening trade. But largely, Samina, what I'm spotting is not too much of action on either end of the spectrum.
Surprisingly, the news about the amalgamation of Aditya Birla is being viewed quite positively by the street. It was an important development. Of course, if the regulator approves it, this is going to lead to operational synergies and improve and make the company a lot more efficient. Aditya Birla Capital, if I can pull that one up, is up 4% now, while Aditya Birla Finance is seeing a slight cut in trade. Godfrey Phillips, we talked about that, a 10% up move yesterday, a 4% correction this morning. The stock is looking weak. KFin Tech is also having a weak day. Action Construction, we'll be talking to the management in a few minutes. But remember, the stock has gone multifold in terms of returns. It had a weak day yesterday, this morning as well, trading flat to slightly lower. Gensol is down 4.5% as well. You've got a whole bunch of losers, really, that I'm picking up on today's trade. Apart from that, you've got Bombay Burma Trader, of course, these are holding companies, but definitely worth a mention. Kalpataru Projects is down 3%. KEC International is also looking quite weak. JB Chemicals, PB Fintech are trading with a cut of 2%. HG Infra, if I can pull that one up, there was a big order win there. It'll be interesting to see how the stock is reacting. Marginally higher, so no runaway gains for that counter either. On the gaining side, you've got KPIT Tech, TCS, those are counters that are looking good. Capital market players are also not doing too badly. Niraj had mentioned Motilal, but beyond Motilal, you've got IFL Finance, Motilal, that whole host of capital market stocks are trading with big gains this morning. JM Financial as well recovering about 1% higher. So that's the trend. No runaway gains, but it's a stable looking market. Akshay, if we do hold these levels over the next couple of minutes, would you be brave enough to initiate a fresh long at this point? Because while it's not moving up, there is quite a bit of support that we are seeing on the street, at least in the first few minutes of trade.
Yes, so the setup for the Nifty index is unfortunately a bit negative as far as yesterday's data points go. But if you are keen on a buy trade here, Bank Nifty is nearing a support, which is around 150 to 200 level, maybe 50-60 points away from the support zone. So that is more vulnerable for a reversal or a day trading pullback. So if you're keen on buying for a reversal trade, Bank Nifty would be the buy candidate. 47,150 to 47,200 is the area where you buy. Keep a stop loss below 47,000, and in case it reverses, 47,450 to 47,500 will be your day trading targets.
Okay. A stock that's standing out is OFSS. All so often now, Oracle Financial Services has made it a habit of giving some very positive, surprising moves. So bring up, let's say, the 12-month chart. And you'll see sporadic instances in the last 3 months wherein OFSS has given this very large, sharp up move and then stayed higher. Look at that. The last 3 months, it's been a very strong move for Oracle Financial Services. Akshay, do you look at this on the charts? It's not a very heavily traded stock, but still.
Yes, so I believe OFSS is trading strong on the back of its gains, which we saw in the global markets, in the US markets rather yesterday. The chart is absolutely a very fine setup, a strong chart structure. 8,000 is the base which it has set up, and the momentum is clearly evident in the charts. So for people who are holding on to this stock, 8700, 8750 is the targets I would look at from a medium-term perspective. For fresh entrants, ideally a slight dip around 8200 makes it a good risk-reward bet. So a positive structure, 8,000 support, 8750. That's the view I hold for OFSS.
Nirav, any thoughts on OFSS, nuclear software, Intellect Design Arena, these banking software-related companies?
Unfortunately, we do not track any of these stocks. So.
No, which is fine. I mean, okay. But that stock has done well. By the way, AB Capital is doing well. It's up about 4%, so not bad. There's some bit of an uptick in IGL now. So 436 and counting, so 294. So watch out for that too. The other set of stocks, like we were talking about, BPCL is up and about in trade today. And if the election dates are announced close to, can it bring about a bit of a reversal of sorts into the fortunes of the OMCs, which have been sideways to maybe marginally lower in the recent past? Nirav, fundamentally, are OMCs a good bet, or you would stay away?
No, I think we've been maintaining this view that OMCs definitely look attractive, but one should make a staggered entry into these stocks at different levels. So I think we would remain positive on the OMCs.
Akshay, any of those IT stocks you'd initiate a fresh long on for an intraday trade?
First is Birla Soft. If you look at the chart structure, the stock is possibly making a short-term bottom at the level of 760. It is currently at 789 odd levels. So a possible short-term reversal candidate. It fits on all the trading parameters and is setting up for a target of 815 to 820. So the first pick would be Birla Soft from the IT space, and you can consider Wipro here from that's the second stock, which again is a possible short-term reversal candidate, setting up a base at 510, currently trading at 520, and 545 to 550 is the targets I foresee in the stock from short-term trading perspective.
Do you track Jio Financial? I mean, it's tough, I guess, not to track this one, but the stock is up 50% in the last 2 months. It's up another 5% this morning. What are you doing with this one? Is there a tactical reason, rationale to buy Jio Financial at the current market price?
For me?
Yes, Nirav.
Yeah. So, actually, we had recommended Jio Financial Services at much earlier levels, and of course, at this point in time, the momentum has been quite strong in the counter. And they are awaiting certain approvals, the MF licenses, etc. So I think with all these things falling in place, I think the stock price has started playing catch up. So I think that would be one of the reasons for the jump in the price.
Right. Akshay, on the charts, Jio Financial at 371, does it still look like a good trade on the long side?
Yeah, absolutely. If you look at the broader financial services chart structures, this stock is clearly the leader among them. After all the mayhem and the news, the negative sentiments, which has led to a lot of profit booking in majority of the financial services, clearly the money is shifting and following this particular stock. A very strong chart structure which holds us a lot of promise, even if you are an investor from a long-term perspective. From a trading or a short-term perspective, even at the current overstretched levels, I see targets of 425 to 450 coming soon. So buy at current market, even average it out on slight dips around 360 odd levels. 345, 350 is a good base, and 450 is the target you can see in the next 1 to 1.5 months.
Right. Thank you. Thank you, Akshay. Thank you, Nirav, for joining us today on the show. We'll take a quick break, but on the other side, we'll talk to Waaree Renewable. Remember, the stock is up over 500% in the last couple of months. Also, it seems like there could be a stock split around the corner, but Dilip Panjwani of Waaree will join in on the other side, so stay tuned.
Welcome back. You're watching India Market Open. Now, the solar push by the government and especially the rooftop solar scheme, which will cover 1 crore houses, has ensured that there is huge enthusiasm in the renewable space. And one of those stocks which has seen a massive run is Waaree Renewable Technologies. In fact, we should pull up the 1-year chart and see what's happened with that stock over the last 1 year. Not having a very great day today, but that's because they're up for a stock split as well. So you've seen that run up in Waaree Renewable Technologies. Now, today we're speaking with the management to understand what the outlook, the business outlook is for the company. Dilip Panjwani is joining us. He's CFO at Waaree. Dilip, very good morning to you. Thank you for speaking with us here at NDTV Profit. Let's begin by talking about, what is maybe on top of mind for investors. 16th March is your record day for a 1:5 stock split. Can you explain the rationale behind this?
Very good morning. We have explained our rationale in our explanatory statement that, our stock has been, a 4-digit stock, and we want retail investors' participation going up. We have seen a significant participation, and we have received requests from a lot of stakeholders to stock split this stock. And that's the reason, to make it affordable for retail investors who wants to buy in smaller pieces. We have done this stock split.
Let's talk a bit about the business. The stock split news is seeing a bit of pressure on the stock, at least today. But let's look forward and talk about the business. Your last quarter was a fantastic one in terms of, profits, orders, significant jump up. It's been a good quarter. Now, post that, there has been an announcement on this solar scheme, the solar rooftop scheme. And then a positive sentiment towards at least the stock price. I want to understand from you, Mr. Panjwani, how exactly is Waaree Technologies going to benefit from this government push for solar rooftops on 1 crore homes?
That's more of a retail, but I would like to take the journey in a different manner. Ever since we announced our results, we have seen only good news coming up in renewable space, starting from, Prime Minister's push towards these retail households, and MNRE pushing for more business contracts towards renewable space. And there we have announced 3 large contracts in a short span of time of just 30 days post our results. So these 3 orders itself take us back to again kind of a 3x growth for us. Biggest among them, of course, we have announced is the turnkey project from NIPCO, which is government's commitments to push renewable energy. It's a 450 megawatt DC project for us, and it's a feather in cap, it's a pride moment for us. So that's going, business is pretty going strong as of now in renewable space, Samina.
No. So that, of course, and we'll come to your order book and, what is the kind of execution of your order book right now, Mr. Panjwani. But just to understand, so when the government talks about adding solar rooftop or solar energy to 1 crore rooftops, directly Waaree doesn't benefit in any clear way because your retail exposure is minimal, if at all.
Yeah, for Waaree Renewable right now, retail exposure is minimal, but it offers an opportunity as it deepens the renewable space. And, then every participant just adds to the momentum. But as such, Waaree Renewable is very less in it's Waaree Energies, which is our parent company, which is more in that retail space, offering modules,
Now, talk to me about PV module prices, which have cooled off. How does this impact you?
No, it impacts towards decision making. The decision becomes much more faster and easier for participants. As the project cost, there's when ones who are sitting on fence, they easily go and decide that they want to lock in the prices at this moment. So it's good from our perspective that it adds to the momentum much more.
And, if I talk about your EBITDA margin guidance in Q3, you saw EBITDA margins, even though your profits were up, your EBITDA margins came off a bit. What is the kind of, revival of EBITDA margins that you're seeing going forward, and what would be that on the back of, Mr. Panjwani?
So, when we undertake contracts, we are always guided by that we want to deliver between 15 to 20% EBITDA margins. And we have consistently done that. And, we always say that, you have to look contract in whole perspective rather than, any quarter wise. So there could be outliers from any side, but 15 to 20% is what Waaree Renewable always, targets to achieve the EBITDA margins.
Okay, so 15 to 20% EBITDA margin is what you see going on track, as we go into the next few quarters. Is that correct?
Yes.
Okay. Let me talk about your order completion. You want to complete about 900 to 950 megawatts this year. That front loads quite a bit in Q4 itself. That means, you are going to have quite a hectic quarter, but maybe 470 megawatts will have to be completed to meet that target. A, is that doable? B, what does this mean for how you will finish off the year in terms of revenues?
Well, it's certainly doable if the question is in binary. But, in projects, there could always be, sometimes unforeseeables. But we are on track with what we have been committed, with this kind of growth rates that is coming and the kind of order book that we have stood. As we speak, unexecuted order book, we actually are now staring at 2.5 gigawatt of order book.
Okay. And what is your current unexecuted order book?
2.5 gigawatts.
Okay. 2.5 gigawatts is. What is your order pipeline looking like, Mr. Panjwani? Can you give me, some sort of color on that?
So as we speak right now, we are looking at 10 gigawatt of order book pipeline that we are chasing with our customers, Ranjana.
All right. Just as we wrap this conversation, a word from you on India's solar energy portion. What has held it back so far? What is the kind of, opportunities you see there as we want to, of course, fit our targets or hit our targets on renewable energy, on clean energy? What are the opportunities you see for Waaree?
Opportunities definitely are immense, but, going back to your question, as to what held back, it's actually alignment of policies, government commitment, the clean energy commitment globally that's happening, alignment of all this at one go. And, MNRE also has been pushing that they want to achieve the 2030 guidance on 280 gigawatt of solar and 220 gigawatt of wind, which is on the renewable side of 500 gigawatt. That push is now seeing actually in terms of investments. So that's aligning it at one go right now.
Absolutely. All right. Thank you so much, Mr. Panjwani, for speaking with us. He's CFO at Waaree Renewables, talking about the outlook for the company. Stock on a bit of a pressure today. Remember, 16th of March is the record date. They're going to go in for a 1:5 stock split. They've already seen quite a big run up. I think important to also note that while a whole host of stocks in the space of renewable energy and solar energy have seen a bump up because of a government scheme to have solar rooftops installed in 1 crore homes. This particular company does not have any direct retail exposure to what we're seeing. We'll do a quick market check before we head into the break and line up our next conversation for you. A decent recovery, actually, on the Nifty. A decent recovery from where we opened this morning. And, that definitely is looking positive. Look at the Bank Nifty. Bank Nifty also not too bad, nearly a percentage up at this point. In terms of gainers, TCS recovering smartly. So are all your financials. ICICI Bank, HDFC, SBI Life. SBI Life having a good day for a second consecutive trading day, as is HDFC Life. So that insurance space looking strong. Adani Ports as well having a pretty good day. It is your consumables which are say having a bit of a slide today. ITC 2.5% down, but that's also because we know the parent company BAT is going to be offloading some of its stake this week itself. Cipla, HUL, Nestle, the others which are seeing a bit of pain. We'll take a very short break, but on the other side, we're speaking with the management of Action Construction Equipment. Stay tuned.
and welcome to India Market Open. We have a very special guest joining us today, Saurabh Agarwal, Executive Director of Action Construction Equipment, joins in. Action Construction has been a star in the last couple of quarters, couple of years. In fact, the stock itself is up over 250% in the last year. It's been very, very action-packed. The last 6 months have also been fairly euphoric for the company. So lots of investor interest in this one. Saurabh joins us now to talk to us about the company, the outlook and growth guidance. Hi, Saurabh. Firstly, congratulations. You've had a pretty fantastic quarter and the outlook, I believe, looks as promising. Let's start by recapping how the quarter has been. Your revenue was up 37%, EBITDA was up 80%, margins have improved substantially as well. Profitability is up nearly 90%. Do you want to break that down for us?
Yeah, good afternoon. Things have been good in the recent past, and I would say especially after the country started recovering post-COVID, and it has been only northwards since then. Yes, there was a blip in 22 because of the war and the inflation, hyperinflation, everything hit it. But things are very much normalized and the demand very much came back, I would say, in the Q4 of last year and has been continuing since. If I talk specifically of the last quarter, yes, again, we were able to do our stellar numbers. And again, our biggest ever quarter with respect to revenue and profitability and even in profit terms. So things have been good and the momentum still continues. And going forward, I think we are in the right space with respect to, where we are operating and we are trying to do all the right things to, make everything happen.
Saurabh, in your con call, you had guided, you're managing to do close to 800 crores of top line every quarter. You've guided for 4,400 in terms of top line by FY26. Are you on track to achieve that in terms of capacity addition? I do know that you've also acquired some land. Will you have enough capacity to fulfill that revenue guidance number by 26? And also, is there an upside risk to this? Because clearly you've been outperforming most optimistic expectations recently, at least.
Yeah, so many questions in one, but I'll try to break it down. See, FY23, we did close to about 2,200 crores, a little plus minus. So let's say by FY26, I think we are on track to attain 4,400. But in saying this, I would like to say that we are also on track. I believe that maybe taking our turnover 3x over the next 5-6 years. So that looks possible. The way our country is glowing, I would say, at the current juncture. And with respect to capacity, yes, whole of last year, the year which is currently on, FY24, we were struggling with some capacities and deliveries. So we have done some CapEx, put our capacities in place. And I think now we are capable of close to about 4,000 crores revenue, which we can attain. And our current industrial park, which is close to about 100 acres. So I think the maximum potential there is to go up to 5,000 crores. And the real estate prices and especially land, industrial land, the prices were going up. So we thought it prudent to acquire land for our future growth beyond 5,000 crores of revenue. So that land is already in place. Most of our CapEx, which we had invested in place, some parts of it will become functional even in Q1, Q2, further adding to our crane capacities. And if I talk of capacity utilizations, currently with our expanded capacity, we are already operating at 80% in cranes. And in the next quarter, I think we will add more capacity, which will flow in. And with respect to our construction equipment, we are about 50-60%. With respect to our metal handling division, we're about 60%. And agri is 40-45%. So hopefully we have enough space to cater to the market in the next 1 year. And obviously we'll keep on planning on the go as it happens.
So just to understand this, with your current capacity, you could achieve a top line of 5,000 crores. Is that the right assumption here?
See, the right assumption is with our current facilities in place after upgradation and brownfield, greenfield mixed together, we are capable of 4,000 crores.
Okay.
And which we were owning the main about 100 acres where we are set up. So that with that we can go to a potential of 5,000 crores plus. So we have to still set that up with respect to reaching 5,000 crores, which we might do in the next year.
And this is with regard to the land as well that was purchased for 82 crores, right? That is where the additional capacity is going to be built in.
No, this is on our existing land.
Oh, lovely.
So, so about 82 acres of land We have already done agreements, and hopefully by April, May, we should be acquiring the entire chunk. It's in two pieces, a 22-acre and a 62 acre, 61 acres, something like that. And that should be with us in Q1 of next year. That is to go beyond 5,000 crores.
Okay.
If the country allows us.
So by the end of the next financial year, you'll have this 82 crores of additional of the land that you've acquired, which will have additional capital as well. So if I had to ask you for a ballpark, by the end of FY25, what will your capacity stand at, and what sort of numbers would that then go to in terms of revenue? If you were, there was this 100% utilization or 80-90%, which you currently stand at.
Our capacity for pick and carry cranes should be by end of FY25, or let's say middle of FY25, should be close to about 15,000 pick and carry cranes, close to about 800 to 1,000 tower cranes. I mean, all put together, it's easier to maybe convert in a revenue term. Maybe we'll be close to about 4,500 to 5,000 crores in the next year with respect to capacity. Currently, we're at 4,000 crores capacity average.
Right. Right. I'll talk about the various verticals in a minute, but talk to me about your margins. I know you've guided for annual margins at a run rate of 15%. This quarter has been exceptional. I think your margins have come in over 16%, up nearly 400 basis points from what we saw in the same quarter last year. What has led to that margin expansion, and is that sustainable going ahead?
Yeah, I think mainly it is to do with operating leverage. So I believe that with every 500, 600 crores increase in revenue of the company on an annual basis, we can increase our margins by close to about 1%. And obviously, this was also driven by the hyperinflation because of the Ukraine war last year. So that came under control in Q3 of last year. I mean, it started to come under control. So the full effect came in this year. So with operating leverage playing in, with the commodities being reasonably stable and rightly priced, I think these are the two main contributors, apart from all the cost reduction and value engineering and the other aspect that we, as a continuous process in the company.
Right. I want to talk to you about the fact that you've got various avenues which contribute to your top line. Tell me, what sort of growth are we expecting in each of this? So if you have to look ahead, and I'm not talking next quarter, more from a 2 to 3 year perspective, where do you think growth is going to come from? Will it be cranes, construction equipment, metal handling and agri segments? What is the big bet for the company in terms of biggest growth or maximum growth?
See, with respect to revenue contribution, cranes is our biggest segment, contributing about 70%, followed by construction equipment at 14%. And metal handling and tractor with about 6.5% and 9.5% respectively. So going forward, I believe that obviously cranes will continue to grow at a similar pace, maybe slightly slower or even faster. That time will tell. Construction equipment should be our, as a segment, should be able to grow the fastest. We believe that growing there at a pace of 40% plus over the next 4 or 5 years should be possible, because we are new entrants, our base is small, but now our product is well accepted. So I believe that construction equipment will be fastest for us. And definitely with respect to our forklifts, where we've been growing at 15-20% on an annual basis, I believe that there is a scope to grow at 30-40% there. And I think in the next year, we should be able to attain similar growth. Around 30-40% is 15-20% in forklifts as well. We are talking about the next future. And hopefully, the last segment, agri. So we've been growing the 15-20%. We would love to grow faster than that. We have put all our, all the corrections, all the things have been done, to facilitate growth there. So let's see how fast we are able to take it further, faster than 15-20%.